Hi everyone. Welcome to VCTV. I call this the masterclass session of VCTV, Venture Capital TV. The reason is we have two speakers and we are end of the year, almost end of the year. And rather than talking about investment that happened in recent times, let's share insights about all the investments that happened in 2020 across all the sectors that you can share with our audience and with our founders. So that's the topic for the session today. So before we start the session with our speakers, I'd like to introduce myself. My name is Sunny Mohanty. I'm the regional director of LATOKEN. I'm based here in Singapore. I host VCTV, which is the Venture Capital TV, from Monday to Friday, 8 p.m. Singapore time, without a miss so far. So that's the beauty. That's the beauty about VCTV. It keeps me so much interested because I get to meet such great people like Karina, Nitin every day who would like to miss such a session. And again, our founders, our startups who are actually tuning in every day to learn things from us, learn things from Marina, Nitin, and other speakers that we have on the panel, because we cover a variety of topics. We do not specify us or to a particular topic. We have different topics every day. So that's the beauty about VCTV. That keeps me going. So yeah, that's about me. Today, again, as I said, we're going to talk about investment that happened in 2020. And we have Reena joining us back on VCTV. It's still night outside. I can see her through the window, see it through the window. And Nitin again joins us from yesterday. Welcome, guys. Nitin, I would like to start with you. Your background looks okay today, very professional. We start with your short introduction, then we move to Reena after that. Thank you.
Thank you. As long as we got a good background and a chirpy face, we're all set. So thank you, Sony, for having me here. And once again, a big warm welcome to the viewers of VCTV. So a little bit introduction on ourselves. So I'm the third generation of the Green Capital Single Family Office. We are a single family office based in India with about 70% of our investments in India and about 30% investments in US, UK, Europe, Dubai, Tokyo, Hong Kong, and Singapore. Our current assets under management are about $300 million. We invest across asset classes, namely public equities, private equity, venture capital, real estate, bonds, and alternative assets. And all excited to have this masterclass session. Thank you for having me.
Fantastic, and welcome back, Nitin. Thanks for that introduction. Next, we have Reena. Hi, Reena. Hi, hello.
How are you? Hi, how are you? Did you say you see light in my window? There's no light there.
I just, sorry. Excuse me. I don't see light. I rather see a dark.
Right. It's definitely dark, and the roosters haven't even cock-a-doodled. So maybe we'll hear them. I think they're cold today. We have a first cold front cold. So anyway, it's a pleasure to be back. I love VCTV. I love connecting with people all over the world, investors and entrepreneurs. I would love to see more entrepreneurs pitching. Come on, entrepreneurs, come and pitch to us. As I always say, my name is Irina Litchfield. Many know me as a crypto superwoman. I'm founder of Blockchain Cubed. We are a blockchain integration company, so we do consulting, architecture design, anything you need with blockchain, we have it. I've been in space for 8 years, so my baggage of and badges of experience are quite vast. And working on global integration level as well. I'm president of Lumeria. Lumeria is where capital meets innovation. We work with early stage and later stage companies, and our goal is to democratize opportunities and democratize investments. And it's a pleasure to be here as always.
Thank you. I like that tagline, when capital meets innovation. Wow. Yeah. Great, and welcome back, guys. Irina and Nitin. I love to talk to you. I spoke with Nitin yesterday and Irina almost every day. So let's talk about investments. What happened in 2020? What went wrong? What went right? And what was surprises? I mean, a lot of surprises, to be honest. When it started like 2020, the lockdown happened, the pandemic happened, the economic, the borders shut down, the travel closed, no events, no conferences, and a serious dip in the economy of the entire world. I mean, we were thinking this is the most disastrous year that humankind has ever witnessed. And probably some of us were thinking. I mean, I've heard that probably this is the end or something like that. But however, with everything else, like with human beings, we are very resilient beings. We know how to come out of crisis. We are born like that. So a lot of good things happened as well this year, 2020. Even though we had loss of life, we had a lot of other tragic issues, but good things as well. So let's start with Nathan. Just take us through what happened in 2020 in terms of investments from your perspective, because you cover India, Southeast Asia, a big region actually in totality. So let's just share those insights with our audience. Thank you.
I think it's been one of those once in 10-year phenomena which we get, which educates a lot of people, including investors like us, because we get overconfident when asset cycle prices go further. So these are experiences, and I'm very happy that we got this experience, because without these experiences, you cannot become better investors, better entrepreneurs, better capital allocators, and these are very important to have. And people at that point in time think that we are going to the end of the world and end of liquidity cycles, but nothing really changes. Ultimately, what really happens is that the economy does bounce back, the asset prices do bounce back, the liquidity does come back. But at that point in time, it feels very bad and pain in the gut and worse. But honestly, I'll tell you, if you are a very smart investor, you would have been little bit percentage allocation on cash would have been very high going into the year in January and February, because we were at a very, very expensive valuation on all asset classes. So obviously a bit of cash did help. And once this drawdown came in, these are actually opportunities that we look for. Unfortunately, as juicy as they may seem, this is what an investor looks for, and this is not the time to step away. This was the time to step in, rather, with whatever you had, and you could have picked up anything. And obviously, in 7 or 8 months, the returns have been humongous. We are all happy, and to the fact that at least asset prices have done well. Economy doing well on the ground is a different situation altogether, because it's going to take time to recover. It's going to take some time as we get into next year. And honestly, we were able to spot a couple of trends, and maybe I will speak about them later in detail. But in a broad snapshot, that's what we envisage the situation to be. If you'd like me to speak about those trends, I can speak now or I can speak later.
Yeah, sure. Let's start with Irina next, then we can go and with you, Nitin, next.
Yeah.
Thank you so much. Irina, over to you about the investments in 2020.
Well, as always, tough times force us into looking around and seeking what is there that we haven't seen. And I think that's exactly what is happening right now. For the most part, what I think is interesting is that a lot of investors are looking for opportunities in the places where they naturally wouldn't be looking at this year, yeah. Right? So, for being the person who is driven by integration of innovations, that's just very exciting to me. Obviously, these are challenging times, and they are pushing us kind of into adoption of understanding how do we analyze all the deal flow through, virtual, right? There's no personal contact whatsoever, and yet we must continue deploying. And it is a challenging thing to do, because we've, especially in San Francisco, they were just relying on the system that they have built. So the machine that used to work no longer works. And the opportunities are becoming exhausted in a way of drying up deal flow. and there's not really a good systems yet to handle the virtual deal flow, right? The analysis, the kind of everything that we need to do, which is a great thing because we really need to improve the innovation for the investors. We need to create better deal flow, better connectivity. And that's what I really enjoy about VCTV as well, is that it allows us to stay in touch. It allows us to, make sure that we keep meeting. I was planning to go to India. I was going to Asia, right? I was going to Abu Dhabi. I was going to Malta and Europe and all the places. And it's possible that a lot of people that I have met on the VCTV this year, I percentage of them I would have met, and that's what we used to rely on, and now it's all gone. So to me, that's the important part. Also, what's interesting is that the pressure is there to deploy, right? So because LPs are getting, for funds, LPs are getting very uncomfortable, right? How are you managing? How are you deploying? What are you doing? And you're not doing what you need to do. Give me the money back. And so those are great opportunities, and those are great problems that were problems before. Especially in venture capitalism, we live in a very segregated world where Silicon Valley has been kind of dominating the world and while they're pushing innovation, I believe it also was kind of creating some problems for a lot of entrepreneurs, because it is expensive to get on a plane. It is expensive to get to the hotel. It is expensive to do all just smoozing and whining and dining and meeting with all the people you need to meet and being in San Francisco, right? So now we're getting pushed outside of that box, and I like that.
Right, absolutely, absolutely. And you rightly touched on the fact that we're missing out on meeting people. I mean, that's very important for any business or any entrepreneur or any investor to be meeting people, socializing. And VCTV has given all of us the right platform. I mean, who would have thought, right? I'd be talking to Irina in Texas and Nitin in India and sitting in Singapore. So yeah, thank you, Irina, with those, starting words for the session. Nitin, let's dive deep down into these areas. So which sectors got more invested, like more during this pandemic, more benefited in terms of investments, grew, because of the pandemic, of the crisis, as compared to others? And do you think the distressed assets class like real estate, are they going to be appealing more investors eventually? So yeah, let's talk about those in those lines. Thank you.
So it was very clear in March, and if you had trends in mind and if you had sector specific allocations in mind, you definitely had to invest a lot more in work at home kind of stocks or businesses, right? What I mean by that is in March, at least we invested on the platform that we are speaking right now. So we invested in Zoom, we invested in health and hygiene, and they, according to us, were two of the main key sectors, at least personally for us, that would have done well. I think this is the first time that something that we have picked has worked like clockwork precision. It's never happened in my 20 years of investing. It's always been up and down. But this year, it just, you pick up something and it just gives you a 5x return. So we're sitting on a 5x return for Zoom, which we thought was too much for this year to digest. And we shouldn't be so greedy. So we've exited part of our investment in Zoom in October at a 5x return. We invested in banking because banking, at least in the Indian nation context, there was a couple of examples of certain banks which were absolutely available at one price to book, which has never really happened and probably happened last time in 2008, which is about 12 years back. So I think we felt that that was interesting. That's already given us a 1x return, which we continue to hold. And we invested in a couple of health and hygiene brands. A couple of examples being Clorox in USA, I would say Godrej Health and Hygiene in India, Procter and Gamble Health and Hygiene in India. Because if you look at the disinfectant industry and the cleanliness and the health and hygiene, they're really obviously the demand is shot through the roof. Of course, we feel now it's a turning point. The turning point and the pivot is what we are strategizing on. And the rotation is going on in our strategic investment allocations is that we are moving away from work at home kind of businesses and stocks. And we're again rotating back into
Yeah.
work out of home kind of businesses and stocks. And by that, I mean, we've already allocated some portfolio exposure back into airlines, hotels,
Yeah.
back into retail, back into distressed real estate, because we don't want to time to the T. We just think that the trend and the news flow is enough for us to rotate back into these kind of businesses because we think that is probably just another 1, 2 quarters away and the opening up will start in the real measure in the economy. So I don't think we have to be negative about it. I think by Feb and March, we should be well on our way for travel and our vaccines will come in. And I don't think people will even wait till that. They'll be dying to get out. So I don't think it has more legs than that.
Yeah, totally. I think one is sustainable investments, another is distress investments. These are the two areas, my personal favorite in terms of investments. So, Nitin, you mentioned about banking. So, when you say investments into banking, where those neo banking, because India is known for neo banking, and was it that or?
It was a traditional asset lender. I wouldn't say it was a digital asset lender or a new banking. It was one of those traditional asset lenders where the drawdown happened immensely and which is a very large bank lender in India and lends to a lot of large corporates here. Of course, the group is based from one of the largest family offices in London and one of the, I think, the top five richest people in Britain. So it's a very, very large bank. And I would say that banking in India is one of the most biggest plays that you can have because of the sheer economic size of the economy and the consumer and the lending and the opportunity. And then it's also about evaluation, right? It's also about if Bitcoin is at 5, 6 thousand, then it's a blind buy. I don't need to think twice about it. But obviously, it doesn't sustain those levels, and you can see that it's back to 14, 15,000. So it's an example of an investment which is available at a lower valuation, and you know that actual asset price of that investment is far higher.
Right. That's a great example in terms of investments done in this year. Thank you, Nitin, for sharing those insights. Irina, what have we seen in US, specific to US, if you like to share?
That's just crazy.
I can imagine.
Oh, man. Oh goodness. It's so funny. What I think what's amazing and what's keeping us together and why we're not collapsing is because of the technology. The fact that we can do this, the fact that we can continue pushing forward and making sure we do see new deals and connecting and for those that are moving in the times right now, for those that are actually taking steps forward, things are going very well. There are so many opportunities on the table, and it's like, where do you go, right? It really is amazing. Right now, if you're an active investor right now, it's just it's just not enough time in a day to get things done. And luckily, nobody cares about the boundaries anymore. So if you send somebody an email at 3 a.m., nobody cares, right? So, all that. Now, by that, it means too that if you don't respond with like 24 hours, people are like, oh my gosh,
Yeah.
you dead? No, I'm just spending time with the family. It's okay. So that kind of summarizes to me the US. We're seeing a lot of opportunities happening in a shift of transfer of wealth in as far as farming land for the most part, and it's just kind of like not a lot of it discussed, but for the most part our farmers are in average something like 70 something years old, and their families are not interested in handling farms. And I mean, we're talking about thousands and thousands of acres, right? So huge transfer value there, and a lot of big opportunities happening in the land right now. Depending where it is, in some areas the construction is just booming like crazy. New type of homes that include better environments are booming. Basically in US, things that are up, kind of for upper class, for people that are on what we call top split of a K trend, right? So we're seeing K trend, right? Those that are doing well, they're doing very well. Those are not doing well, they're really on a bottom, sliding down, which is really terrible. We need to make sure that, remember, it's the middle class that allows thriving economy. So that space industry is out of its mind. I mean, it's unbelievable what's happening in space. Liquidity is happening faster. For the most part, it's mergers and acquisitions. So we still need to push the space industry startups into later stages, and we need to make sure to provide liquidity for them through kind of a going public. That's what we are working on with Lemeria. So, but space investments are moving very fast. While last year, a lot of investors were still unsure, and for the most part, you would hear, "Well, I already have some, SpaceX or whatever," or I'm not interested in it. Like Elon's got it, right? This year, people are really starting to understand and dive into seeing what is the depth of space. What are different verticals of possibility and investments, and most importantly, a lot of businesses that provide solutions for space are pivoting and providing solutions here for people, because basically when you build something for space, you building for very closed and very harsh ecosystem, right? So for example, growing in space, we need to have that. Now it's becoming extremely popular with people that are growing here locally for the greenhouses. I believe it's a geospace. It's out of my head right now, but there are many companies that were concentrating exclusively on building sustainable gardens and ecosystems for the moon, for space stations. There's a lot of commercial kind of a push happening there, but now they're also pivoting and saying, oh, people want to have it here because people want to stay home. And then also, how do you, now the question of, if the air tries to kill you, which a lot of people went through that momentum where they did not know if it was dangerous to be outside, it really opened up their mind to like, okay, no, I do not want to go to grocery store, and no, I do not want delivery person touching my food, and I don't really want to be sanitizing every freaking apple that I get. Right? Like, I mean, these are all realities of life that we all came through together, on one level or another. And we're experiencing it globally. So people started thinking, okay, I have a backyard, I have sunshine, I have water. I'm going to grow my own tomatoes. Do not touch my tomatoes. Right? And so, or parsley, and it kind of starts with a little bit growing, and then and then in the end you get a milking cow, like I did, right? And then chickens and ducks running around our homestead. So that's a lot of opportunities. Food, anything to do with food delivery, anything that basically disattaches people from the service and kind of transports food to people, whether it's groceries or dining. Actually, in US, people go out to eat all the time. A lot of people do not cook. They do not know how to cook, and it's a stress point for them. And I mean, that's just the reality of life, right? So now that you can't go out to eat and you don't want people to touch your food maybe, and if you do, how do we build those processes? A lot of opportunities happening there right now, but I think the biggest two opportunities right now is, like I said, the space innovation and of course the land grab. Just so much land coming online, and next 10 years we'll have huge opportunities available for those reasons. Farmers are they just need to retire and exit, right?
Yeah. Great insights, Irina, about space, liquidity in space and farming. And I think you've also mentioned about regenerative farming on our previous sessions. And I really like the way you said you would want to now grow tomatoes, and don't touch my tomatoes, yeah, in my backyard. I wish I could do that. Either the moment you said it, I just felt like I could do that, but I can't do it. I have limitations of space in Singapore. But isn't it fantastic growing vegetables in your backyard? You're sitting at home, spending time with your family, working, you're doing everything from home at one place. Why not grow vegetables in your backyard?
Well, and so that's the beauty of the technology too, that you don't really need to, I mean, some people are blessed with the backyard, but you can actually do it in a smaller scale, very small scales. There's vertical gardens that you can do. There's actually 3D gardens too that you can do that doesn't take a lot of time. It can be a box and a little stand like that has, well, all you need to do is just follow the steps, put in your water, it comes with the nutrition, and then you have your full salad growing, right? It has the herbs, the tomatoes and cucumbers, and there you go. It's just the salad that continues growing for you. And then there's subscription boxes too now that just keep sending you basically, so when it's a time for you to plant the next cycle, and then you can stack them up. So a lot of people doing that, making space in the kitchen, just in the kitchen, to basically grow their salad.
Yeah.
And that's so exciting to me. Connecting people back to their food is so important.
Oh my God, this is so exciting. It's very much therapeutic as well, I would say, when you're growing something next to you, what exactly connecting people back to the food, right? That's amazing. I mean, I love that idea. I think Singapore is known for that farming as well, 3D farming, because of the kind of space we don't have for like US or India. So yeah, I mean, yeah, very good space to be in. Thank you so much, Irina. Nitin, so talking about pivoting, like Irina mentioned about the space startups, they pivoted. What kind of pivots, successful pivots you've seen this year? And what kind of new products have emerged because of the pandemic?
I think I was going through some data in terms of growth versus value investing. And honestly, growth investing has outperformed over the last 10 years. So growth investing would typically imply businesses like US tech, innovation, companies like Amazon, all that. And value investing has really declined. Now, there's only two things that can happen from here. Either value investing declines further and growth investing picks up, or we'll see a reverse pivot which says that the value investing will pick up and old economy bounces back and outperforms the innovation tech economy. By that I mean businesses that have survived this pandemic. So let's talk about oil companies, cement companies, steel companies. It could be a farmer in Iowa who runs a large multi-conglomerate farming, whatever. It could be any of a fast-moving consumer good or a consumer durable company. Those businesses have a lot of cash on hand and have gone stronger in the pandemic rather than weaker. And there's a shakeout of weak hands, which is there. So I do see old economies spending a lot more money on manufacturing, building plants, capex, even mergers and acquisitions that Irina had pointed out. So there's a lot of money, and interest rates being what they are, it's but nature that everyone will be in some sort of an equity now, whether it's venture capital equity, private equity, public equity, right? And interest rates are not going to go up in a hurry, and they're not going to go down further from here too much. So the situation is that I think we will come back to value rather than growth, and old economy, I think, might tend to outperform next year rather than just pure tech growth investing. That's the pivot I think we're working with.
All right. Thank you, Nitin, for that. Okay, now we 30 minutes into the session. I would like to, obviously, we can't forget technology. I mean, obviously, because of technology, we are talking to each other today on Zoom, and we're doing many other things. I mean, I think Gary keeps on telling us Spanish flu lasted for 4 years, and we didn't have Zoom then. I mean, we didn't have nowhere to connect, with.
No, I mean, see, honestly, the point of technology is very right, but it's also about the fact that how the old economy companies become more digital in context. And are they creating digital assets to transform their businesses from old economy to becoming a newer economy company? For example, a company like Reliance Industries, which is an oil and gas behemoth in the world, is now transformed practically into a retail and a digital business with the most, it's created 2 lakh crores and millions of dollars of investment, which is the largest fundraise ever by a corporate in a pandemic in the world. And that's an example of an old economy company transforming into a digital company overnight in the space of 8, 9 months. So that's what I meant by old economy trying to digitalize its operations or get into areas or acquire assets which are in digital, which are in the digital space, so that they come up to speed.
Which is a very good example, Reliance that you mentioned, Nitin, because they are getting invested. Not only that, they're also creating
From
jobs
the
for the
biggest of investors in the world, I mean, I might add, and the biggest of sovereign investors in the world.
Okay, great. And they're also creating jobs for people, right?
Yeah, I mean, that's a butt nature of an economy, right? If a corporate like that benefits, obviously manufacturing picks up, employment picks up. Even in US, if you look at where does the money come from, the money does not come from the high yield in New York. Of course it does, but the main cash cow is actually those strong agriculture businesses, a corn farmer in Iowa, a guy doing cotton plantations who does not know, and that they provide a lot of liquidity to foreign investors and foreign investors who deploy this liquidity around the world.
Right. Great points. I think Nathan shared a bit about Iowa and cotton farming and agriculture farming, which Irina obviously agrees, shared with us. Okay, let's talk about those sectors, those industries who couldn't make it this year, and what's the future for them. Irina, would you like to start first?
And did you say what's the future for I couldn't hear the word for, let's talk about future, all future, or
No, this year, obviously we've seen
this
new
year? Okay, yeah, so we're
this year,
talking about this year. Okay.
this year, yeah.
Okay.
Which are the sectors or the industries which actually couldn't make it this year? Do we have examples?
Well, so first of all, for in US, all investment stops the Wednesday. Basically, if you didn't get your deal in, if you at least didn't get your pitch deck in by Wednesday before Thanksgiving, don't even try. Just don't even try, because after Thanksgiving week, it's all going to be basically just kind of reconciliation and walking through the end of the year to push that, to do the final push internally for the deals that are already there, to prepare for the upcoming year, and to just kind of finish up. So really, we have 10 days left. And the reason I'm saying that is because entrepreneurs, if you are raising money in US, you need to hurry up and you need to make sure that you get your stuff together and reach out to investors. And remember, right now, and even before, there's no such a thing as perfect. Okay, so just make your pitch deck, make sure that you follow up with investors, and and then just go from there. And it doesn't matter, just don't wait until things get normal, because it's like, what does that even mean? Nobody knows, right? So for US, we have 10 days. Get moving. Otherwise, just put yourself on the hold button and see what happens next year. So it's kind of doomsday, but it's the truth. People don't realize it. A lot of people think, a lot of entrepreneurs, especially that are new and earlier stage startups, so seed A, well, angel especially, right? But angel, seed A rounds, they really don't understand the dynamic. Obviously, people that have gone through a round, right, post A, are really, they understand this dynamic, so there's no worry about them. But even those, I hear that a lot of companies are hoping that because things change, they think that investors will also change, and don't count on that. Just, you have 10 days, get your stuff done, get everything in order, and and push forward. Something very exciting happened in America 2 weeks ago. SEC passed a new law, so they opened up. We are anticipating one of the biggest kind of growth cycles that are going to come through primary listings. And basically what they expanded is that through ATS, alternative trading systems, you can create an offering up to $5 million in primary listings to unaccredited investors. And I cannot stop stressing about the importance of what this means, right? It's exactly that allows us to be able to work with early stage companies, right? And because before, basically, if you're an accredited investor, you could buy stock. You just could not trade it until the company goes public. Which is, with the current trend of the way things have been going, now it's going to change. It can take forever, never happen, right? So it has been basically primary listings have been just completely dead, right? Going public has been pretty much dead. But it is where the opportunities are past, right? So we need to see more. What I'm seeing in the future is exactly that. I'm seeing that companies are going to go public, and we have a great railways to offer going public cheaper, in unbelievable cost, cheaper because of application of innovation, kind of in capital markets, not just kind of locally, but as well as globally. And so the global will take a little bit longer time, but it is coming. And as always, we can anticipate things, and in capital markets, everything moves fast until it moves. And then it moves very fast. So I do want to urge to keep an eye on that pulse and make sure that when those opportunities start going and that excitement starts growing, that's, I think, where a lot of opportunities will come for investors and for entrepreneurs.
Exactly. If I understand correctly from both Irina and Nitin, many things actually happened in 2020. Many things got accelerated in 2020 because of the crisis, which is a good thing. I mean, we wouldn't, like, I've heard things getting digitally transformed this year, which were not happening with just talks, which is a good thing. I just want to know from Nitin, so what do you think is going to happen in the next quarter, end of the year? I mean, we can't predict, obviously, things, but this year has been a big surprise in a nicer way. A lot of things move.
See, we are ready for anything at any point in time. As an investor, it's never one straight line up or a straight line down, right? So you always need to have cash. You always have to have your eyes and ears open for distressed opportunities. Now, you asked about certain sectors which you think might not do so well or take some time. Even within the distressed sectors, let's say airlines, hotels, F&B brands, and retail, there will be winners and there will be huge winners and there'll be huge losers as well. And the losers will predominantly be the people who had prior debt and to survive this crisis has piled on more debt. They will find it a bit tough. But let's say a well-run airline, a well-run hotel chain, a well-run F&B brand, a well-run retail brand, which was not in a situation of demand problem before this, and has taken a little bit of debt, I think they will do much better and they will survive. But if you keep on loading debt on debt, debt on debt to just survive, I mean, it becomes tough because the consumer preference for these brands will take some time. It will come back by February, March, April. That also, you've already seen some retail brands are in bankruptcy, some airlines are shut down, some hotels are closing down, and they might not even open up back again. Those are predominantly the ones which had a huge debt from before. And obviously, you can't keep on piling debt, right? Because at some point in time, you need to show the return. So that's a problem area. But within the well-run airline sector, hotel sector, some good brands, large brands who've done cost cutting, who've managed to control expansion, who've got demand back, I think that's a great opportunity for the next, maybe I would say, good 7, 8 years. You've got to have patience. It's what the financial sector did in 2008 and 9 and didn't go anywhere for 2 years, 3 years. And then you saw what happened to it over a period of 10 years. That's one. Economically, you got to look at countries. You got to look at which country is getting stronger. You don't have to look at economic fallacies in terms of geographies, but you have to look at economically. I think the only country which will come out stronger from this crisis and which will benefit from this in at least 8 or 9, 10 years is actually going to be China. And if you look at historical trends, 2008 and 9, the country which creates in context the problem tends to become stronger in 7, 8, 10 years time. So I think China in context, I would think economically will try and take a lot of world power and hold, and US might reduce its economic power.
Good point there. Let's not go to the China-US thing. But anyways, thanks for those.
No, it's a fact. It's a fact. See, as an investor, and if you have economics in your mind, you have to know what's happening around the world and why it's happening, and which countries and which economies will do well. Because I was seeing trends on the Japanese market. Japanese market for 30 years has done nothing economically in capital markets, but recently, I think it's taking out the 30-year average, which means that it could be very interesting what happens in Japan.
Wow.
So there are certain trends that you have to see.
Let's watch out. Let's watch out. Yeah. Thank you. I hope so. Yeah. Thank you, Thin. Thank you, Irina. I just want to know, okay, we're just almost the end of the show. So as Irina mentioned, we've got 10 more days for Thanksgiving and nothing happens after that. So if you're looking to fundraise, we've got 10 days for the American investors. So please go to LATOKEN website and start connecting with these investors, Nitin, Irina, and others that we have. So don't waste time, don't hold back. Nothing is going to change. So
I'll still be there after Thanksgiving with a lot of turkeys. Don't worry, I'll still look at proposals.
Nitin is still looking at proposals, but Irina may not.
I never stop. It's 24/7, 365.
Got you. Thank you. So let's take some closing remarks for the session because it's a masterclass. We try to cover as much as possible. Irina, what's your closing remarks for this session? What do you like to end this topic on?
Well, my closing remarks are for investors to continue reaching out to each other and create stronger connections. In order for us to succeed, we need to have a better deal flow and expand our connectivity and expand our investors network, right? And it needs to be done in local ways and globally. I think that that's one of the most important things because I think that the success of the future highly depends on the way we can connect as investors and provide that infrastructure and foundation to continue pushing entrepreneurs into the delivery, right? And I think that to me, that's the most important thing that I want to empower investors to do is to reach out and connect and expand the network because the faster and better we can be, the better we can adapt. And especially we learned that we need to be able to adapt. So the segregation of, and especially I would like to encourage the Silicon Valley investors to do so because they do live in a pretty close network. And I don't think that serves them well right now. So and for entrepreneurs, just keep on pushing and remember, do not wait for perfect. It starts with idea. And, nobody has the best one idea. If you thought of an idea, assume that a bunch of people have the same idea. And also assume that if you're sitting there not doing anything about it, somebody is doing something about it. So as as Gary would appreciate me saying, get shit done, get up, get things done, and freaking
Love
do
that.
it, okay? And be vulnerable. If you pitch deck, if I mean, you're gonna get feedback, and
Yeah.
somebody is going to say, "Oh my gosh, this is great," and somebody is going to say, "No, does not work." Don't worry about it. Just make it. Take a step forward. Show vulnerability. Ask for advice. When you get the advice, follow up with what you did, to follow with that advice, and follow up again. And before you know, it's all going to be behind you. All the stress will be behind you about being a entrepreneur of early stage, and a real stress
Yes.
when you become a growth stage company, right? And like, that's the truth. It just doesn't end, it continues. The difficulty will continue, and it will always be, you have to be brave, you have to push forward, and you have to make steps and get things done.
Get the shit done. So founders, please don't shy away from investors. They are going to be tough on you, but this is a chance to showcase your vulnerability, sorry, weaknesses, I would say, sorry, tongue twister for me, as well as your strengths. So please don't shy away from coming on VCTV and pitching to Reena and Nitin.
And also last parting words. See, we tend to focus a lot on noise, news, flow, COVID, economy. I think those are the wrong things to focus your attention on. What you have
Yeah.
to really focus on is, what are you building? Where you're going to get the funding from? Is it the right product fit? And also, just imagine, this was a good time over the last 7, 8 months that we as investors, or even a business person or an entrepreneur, has to start creating relationships. You can't stop meeting people. Online, offline is the same thing at the end of the day, because the moment it opens up, it's a race, and the one who gets the worm first is also going to win. And you have to build those relationships. Keep on focusing on the seed. Keep on focusing on building that tree. And this is all noise, economy up, down, volatility, investors there today. Trust me, there's a lot of money in the world, and there are a lot of good opportunities. There are a lot of great entrepreneurs. Money seeks and finds, whether it's a bull market, bear market. Those are all phases. In fact, the best of businesses and the best of investments are actually done when asset prices are depressed, and the stronger entrepreneurs come in, and a lot of liquidity allows them to have that runway of 7, 8, 10 years. And I think it's a good time. You should consider ourselves lucky to be in this and seeing this through.
Fantastic. I just love this session today. So much positivity in the session and panel, and the founders and the startups and the entrepreneurs and investors who are listening to us today. Please reach out to connect, with the investor community and our startup community. So having said that, we've come to the end of the session. Nitin, thanks again for reconnecting back with VCTV after a gap. And we would love to have you back on our panels on different topics.
I just don't want to overexpose myself too much.
Oh, okay, that's absolutely fine. If you want, you can restrict yourself from some panels if you wish to. No issues.
See, honestly, the last part is that people tend to be very depressive about rejections. People tend to have idea fail safe. They tend to get very disheartened. But it's a process. I mean, every investor, if I touch everything and everything was 1x and 2x, then life will be so simpler. But it does not work like that. Some of investments do well, some of investments don't do well. Doesn't mean we stop investing. Doesn't mean we get into depressive mode and stop doing what we're intending to do and what we love doing, and the passion is there. You have to continue doing it, whether you earn profit or loss. It's just a process of learning. Look at it like that.
I think it applies to both investors and startups.
Correct. Yeah.
Great points, both of you. And thanks for being a part of VCTV. And again, we love to, as I say, VCTV is VCTV only because of you speakers, that the time you dedicate, the time and the kind of information you share with your audience and us is what makes it special. So please stay connected with us. More stuff is coming, more news coming as well along the way. Stay tuned. Thank you so much. And viewers, thanks for watching. Please do tune in to VCTV every evening, 8 p.m. Singapore time. And I come live with new topics, new speakers. Till then, stay connected, stay safe, and be happy. Good evening. Thank you.